billionaires are turning to cryptocurrency in response to concerns about fiat currency inflation. Investors who were previously anti-crypto are increasingly turning to Bitcoin and its brethren as a hedge against concerns about fiat currency inflation. One role model is Hungarian-born billionaire Thomas Peterffy, who stated in a January 1 Bloomberg report that it would be prudent to have 2 to 3% of one's portfolio in crypto assets in the event that fiat currency goes to hell. According to reports, he is worth $25 billion. Peterffy's firm, Interactive Brokers Group Incorporated, announced in mid-2020 that it would begin offering cryptocurrency trading to its customers in response to increased demand for the resource class. The organization currently supports Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, but will add another 5 to 10 coins this month. In early December, the billionaire predicted that Bitcoin would reach $100,000 before markets began to retrace their steps. According to Bloomberg, Peterffy, who owns an undisclosed amount of cryptocurrency, stated that it is possible for digital assets to generate extraordinary returns even if some go to zero. I believe it is possible for it to go to zero, and I believe it is possible for it to go to $1 million, he added before concluding, I have no idea. Ray Dalio, the founder of Bridgewater Associates, is another well-known billionaire who disclosed last year that his portfolio included some Bitcoin and Ethereum. This revelation comes just months after he cast doubt on crypto's ability to act as a store of value. Dalio stated in late December that he was impressed with the longevity of crypto, before adding, cash, which most investors believe is the safest investment, is, in my opinion, the worst investment. He has since shifted his position and now views crypto asset investments as alternative money in a world where cash is trash and purchasing power is eroding due to inflation. Paul Tudor Jones, a billionaire hedge fund manager, also purchased Bitcoin last year, describing the purchase as a hedge against inflation. Pandemic-induced stimulus packages have wreaked havoc on economies worldwide, with long-term consequences. In the United States, inflation has reached a 4-decade high of 6.8%. As the cost of daily goods continues to rise, this has resulted in an increase in the Consumer Price Index, CPI. The billionaires have already recognized the dangers associated with fiat currencies and central bank manipulation, and are increasingly gravitating towards crypto assets. By 2022, if the trend continues, more wealthy investors may join their ranks. Square Enix reveals its blockchain and non-fungible tokens, NFT, strategy. While the announcement is brief in its details, it demonstrates the company's interest in blockchain gaming. Significant points to ponder. Square Enix's CEO announced the company's strategy for non-financial tokens, blockchain-based games, and the metaverse. President Yosuke Matsuda dubbed 2021 Year One for NFTs and suggested that as the technology becomes more prevalent, prices will correct. According to the CEO, in 2022, blockchain will be a significant strategic theme. Square Enix, a game developer, announced plans for blockchain and near-field communication, NFT, development on New Year's Day. NFTs and the metaverse, a CEO's perspective. Square Enix announced its plans to develop blockchain, NFT, and metaverse initiatives this weekend in a letter from company president Yosuke Matsuda on New Year's Day. Matsuda noted in the letter that last year, non-fungible tokens, or NFTs, drew considerable attention. Due to the rapidly growing user base of NFTs, he dubbed 2021 Year One. Matsuda acknowledged that NFTs have increased the liquidity of digital goods, but noted that NFT trading has become somewhat overheated and speculative in nature. Matsuda anticipates that as NFTs become more prevalent, price corrections will occur. Matsuda also brought up the metaverse, the virtual reality trend that Facebook sparked in October. He expressed hope that as the metaverse concept takes shape, it will induce changes that have a more significant impact on Square Enix's business. This year will begin the implementation of a blockchain strategy. Matsuda made no specific NFT or metaverse product announcements. He did mention, however, that Square Enix developed a medium-term strategy in 2020 that would prioritize investments in artificial intelligence, cloud gaming, and blockchain games. He added that starting in 2022, Square Enix will make decentralized blockchain games a major strategic theme. Matsuda explained that games that incorporate blockchain tokens can offer players incentives to play while also rewarding users for creating user-generated content for those games. Square Enix has faced public backlash, as has a number of other corporate NFT strategies. Users have criticized NFTs as faddish and expressed concerns about blockchain mining's environmental impact. The cryptocurrency gaming industry is growing in popularity. Prior to March 2021, Square Enix created a series of NFTs for its Million Arthur franchise. These NFTs did not contain any game content, but rather contained digital artwork. Additionally, the company invested $2.01 million in Animoca Brands in 2020, the company behind the blockchain VR game The Sandbox and other blockchain games. Square Enix is one of a growing number of video game companies exploring blockchain technology. Ubisoft recently announced the launch of its own near-field communication (NFT) platform. Meanwhile, EA and Epic Games have indicated an interest in the technology, and GameStop is developing its own NFT marketplace. Other companies, such as Steam, have outright prohibited crypto and NFTs, while others, such as Xbox, are cautious. Estonia's government distributes FAQs in response to concerns about new crypto regulations. Estonia has circulated a series of frequently asked questions, FAQs, in an attempt to allay concerns that its recently approved crypto legislation equates to a ban. The stricter requirements are in response to the Financial Action Task Force's (FATF) recommendation that nations adopt stricter anti-money laundering standards for VASPs. The legislative proposal seeks to regulate cryptocurrency entities, also known as virtual asset service providers, VASPs, in the same way that traditional financial institutions and payment platforms are regulated. It supplements Estonia's 2020 prohibition on the opening of anonymous virtual accounts by broadening the definition of VASP and subjecting VASPs to a stricter anti-money laundering standard. Essentially, VASPs will be responsible for collecting and transmitting Know Your Customer data and will be prohibited from opening anonymous accounts, a technique used to target non-custodial wallets. Additionally, they must obtain a VASP license for €10,000, an increase from the previous fee of €3,300, and meet capital requirements, as well as pay a supervision fee of 1% of share capital and 0.035% of all virtual asset transactions. According to the FAQ, this is to deter dormant entities from registering. Some expressed concern that the requirements amounted to a prohibition on owning cryptocurrency or using a non-custodial wallet. During the draft stage of the FATF's guidance, the industry expressed similar concerns, arguing that depending on how the recommendations are implemented, nations may use them to justify prohibiting decentralized finance or non-custodial entities. If this is the case, the DeFi space may become isolated, with no compliant method of transferring funds between centralized and decentralized entities. Estonia's FAQ made it abundantly clear that it has no intention of imposing a ban. AML regulations do not apply to individuals or private wallets established without the assistance of a service provider. Citizens may hold crypto in any manner they wish and transact with any entity. The anti-anonymity provisions apply only to VASPs that are regulated by Estonia's Anti-Money Laundering Act. This means that the legislation contains no provisions prohibiting customers from owning or trading virtual assets and makes no requirement for customers to share their private keys to wallets, the government explained in its document. Individuals may continue to use non-custodial wallets freely. These wallets simply cannot be established via a VASP, as businesses are required to verify the identities of the account holders. In practice, Estonia prohibits businesses from offering non-custodial accounts. Additionally, it is unknown how Estonian VASPs will interact with non-custodial wallets, as they are incapable of effectively transmitting the user's identification information in a transaction with an anonymous wallet. The FAQ stated that transactions between VASPs and unhosted wallets are permitted provided that each transaction is subjected to real-time risk analysis. On December 23, the Estonian government approved the proposed rules. It must now be approved by Parliament before being implemented in the first half of 2022. Despite the risks, blockchain technology attracts young investors. If you invested 1 lakh rupees in Bitcoin a year ago, it would now be worth nearly 1.7 lakh rupees, despite the fact that it has fallen nearly 30% from its all-time high. By contrast, the same sum invested in the Sensex would have grown to approximately 1.2 lakh rupees. Despite extreme volatility and a lack of regulation, an increasing number of Indians are investing in cryptocurrencies. However, the trend is not solely motivated by the prospect of high returns. Some turn to cryptocurrency to wager on blockchain technology, while others were drawn to well-designed trading apps. Twa spoke with young cryptocurrency investors to ascertain their objectives, strategies, and concerns as uncertainty continues into 2022. Numerous backers focused on blockchain, a secure, decentralized ledger that enables crypto. My family encountered several difficulties during the land transfer process. Blockchain technology may be able to assist in resolving such ledger management issues, stated a Bengaluru-based app developer. The cryptocurrency investors Twa spoke with declined to be identified. According to a law student, cryptocurrency was much more than an investment option for him. I appreciate its emphasis on decentralization. Blockchain technology has the potential to solve a plethora of issues related to duplication and transparency. Investors are well aware that cryptocurrency will not be permitted for payment. For them, it's merely a wager on a futuristic technology that governments cannot afford to ignore. They are, however, cautious about their monetary exposure to cryptocurrency in case a ban is announced. Numerous respondents stated that they invest only what they can afford to lose. The Bengaluru-based app developer invested less than 1 lakh rupees, while another investor invested 5% of his portfolio in cryptocurrency. For others, cryptocurrency is difficult to ignore due to its ease of use. The technology that cryptocurrency exchanges have developed for UI, UX, user interface/user experience, makes transacting extremely simple for users. Even the largest banks are unable to simplify the information displayed on the trading screen when trading stocks, an investor explained. A 26-year-old Gurgaon resident said he opened an account with a cryptocurrency exchange in May after seeing a television commercial. Initially, it was purely for investment purposes. However, once I gained a better understanding of the technology underlying cryptocurrency, I increased my investment, he explained. The youngster, who works in his family business, has nearly tripled the value of his 3 lakh rupee investment in less than a year. The majority of these investors follow a similar strategy: they buy on dips and sell only when absolutely necessary. However, cryptocurrency investors lack a mechanism for resolving disputes. Banks continue to arbitrarily suspend services to cryptocurrency exchanges. As a result, depositing and withdrawing funds is a nightmare, an investor explained. Due to a lack of regulation and concerns about a possible ban, some Indians have even shifted their investments to foreign cryptocurrency exchanges. Additionally, proponents of blockchain technology are concerned about traps such as shitcoins, a term used to refer to cryptocurrencies that lack a defined function or innovative quality. While the last 2 years have seen significant rallies, 2022 may be a difficult year for Bitcoin. Bitcoin's technical charts indicate a bearish trend in both the short and medium term, according to Rajendra Agarwal, a technical analysis trainer and founder of Autus Investment. Ethereum inventor reconsiders ideas in 2022. Where did he go wrong? Vitalik Buterin, the inventor of Ethereum, has emerged from a self-imposed Twitter hibernation period, as he described it on his personal account. Buterin reviewed some of the ideas, proposals, and thoughts from the previous decade in his first post of 2022 to determine if he still holds the same position as when he first discussed them. The inventor of Ethereum listed over 10 ideas, many of which have sparked debate within the cryptocurrency community. Buterin kicked off his mini-tweet storm with Bitcoin, a project in which he was an early participant. In 2013, Buterin published an article discussing Bitcoin's potential to assist people affected by inflation and central bank money policies in countries such as Iran and Argentina. At the time, Ethereum's inventor stated that the cryptocurrency could provide respite, but only due to its internationality, not due to its limited supply. In that sense, he predicted that stable coins and other assets with lower volatility than Bitcoin would gain traction in such locations. Now, he explained, I did, in fact, travel to Argentina. My conclusion, in general, correct. Although cryptocurrency adoption is widespread, stablecoin adoption is also widespread. Numerous businesses operate in USDT. Of course, if the USD itself begins to exhibit more problems, this could change. Additionally, Buterin re-examined his stance on regulation. Simultaneously with his article on Bitcoin's supply, he discussed the cryptocurrency's ability to resist governments and circumvent regulations. Buterin believes that in order for the crypto industry to thrive, it must combine technological robustness, public legitimacy, and decentralization. The alternative, a completely hostile environment, may cause Bitcoin and other cryptocurrencies to stagnate. On the other hand, the inventor of Ethereum admitted that he was wrong in 2015 when he predicted when this cryptocurrency would be able to migrate to a proof-of-stake (POS) model. At the time, Buterin anticipated that Ethereum would transition within 6 months or 1 year. The migration ended up taking much longer than anticipated due to the 2020 deployment of the Beacon chain, a proof-of-stake blockchain that will support ETH 2.0. However, Aaron stated, "My 2015 projections for when we will have POS and sharding. To be honest, these were extremely incorrect and worth laughing at. How Ethereum and its developers have changed over the course of a decade. In that regard, Buterin acknowledged that he underestimated the complexity of software development when he labeled his 2014 ideas too complex. He continued, "Today, the Ethereum research team places a higher premium on simplicity, both in terms of the final design and the path to get there. Increased acceptance of pragmatic compromises." In the same tone as the rest of his Twitter thread, in which Buterin demonstrated transparency and the ability to admit mistakes, he addressed the Ethereum blockchain's congestion and high transaction fees. Buterin famously stated in 2017 that the Internet of Money must be capable of processing inexpensive transactions. Buterin asserts that this is still one of the blockchain's objectives. As a result, we're spending a lot of time working on scalability. Buterin also admitted that he was wrong about Bitcoin Cash and labeled it a failure. He also admitted to being proud of its proposals to build Uniswap, or more precisely, a network of decentralized exchanges, and numerous other use cases for Ethereum that basically predicted DeFi. In that sense, he summed up his decade of experience by highlighting his early naivete and lack of appreciation for the difficulties inherent in leading a large organization with complex politics and cultures. Miami isn't the only Florida city seeing cryptocurrency growth. While the city has become known for its cryptocurrency advancements, other Florida counties, including Broward and Palm Beach, are exploring cryptocurrency opportunities. For South Florida cryptocurrency enthusiasts, 2021 was an exciting year, as Miami established itself as a potential national capital for the industry. The city hosted what was billed as the world's largest crypto conference, launched its own coin, appropriately named after the city, and welcomed an array of companies that relocated their headquarters or established outlier offices in Miami's Brickell Avenue financial district. There are really only two options for cities, Mayor Francis X. Suarez stated at a Bloomberg-sponsored event in Miami recently. They can act as if it does not exist. Or they can confront those realities and embrace the disruption and change. It remains to be seen whether other South Florida cities and counties will follow Miami's lead in the coming year. Despite or perhaps because of wild swings in the price of Bitcoin, the groundbreaking digital asset, the region's consumers have been clamoring for a piece of the action for several years. According to the Pew Research Center, approximately 16% of the U.S. population currently owns or previously owned cryptocurrencies. 6 years ago, it was 1%. Crypto investors have developed a preference for the asset due to its independence from banks and government regulators. Typically, coins are stored in virtual wallets, which include online services that mimic bank accounts. In Broward and Palm Beach counties, an increasing number of local businesses, ranging from real estate and yacht brokerage firms to hair salons and charter jet companies, have begun accepting Bitcoin and other cryptocurrencies, and Bitcoin ATMs have sprouted up throughout the Tri-County region. However, local charities have expressed interest, Broward investment firms are bolstering their crypto credentials, and local governments are brainstorming ways to maximize the benefits of the new currency's characteristics. Examining the situation. There is less buzz and sizzle for cryptocurrency north of the Miami-Dade-Broward County line than there is in Miami. Local governments, on the other hand, are looking for ways to get involved. Additionally, private financial firms dealing in cryptocurrency are establishing offices in locations ranging from Fort Lauderdale to Palm Beach Gardens. Although the Greater Fort Lauderdale Alliance, Broward County's economic development arm, does not have any crypto-related projects, Mayor Michael Udine is a supporter and serves as the county commission's liaison to the alliance this year. He stated this week that he personally owns Bitcoin and Ethereum, the second largest cryptocurrency by market capitalization after Bitcoin. In February 2021, while serving as vice mayor, Udine suggested to county commissioners that they consider allowing residents to pay tax bills with Bitcoin and developers to pay permit fees with Bitcoin. Nothing is concrete yet, he said Wednesday, adding that an exchange must be identified to help the idea succeed. He is speaking with a few individuals. Udine added that he is also interested in utilizing crypto to enable unbanked consumers, or those without bank accounts, to access the financial system. Several different stakeholders have participated in conference calls to discuss banking the unbanked, he explained. They include FTX, a cryptocurrency exchange platform based in the Bahamas that enables users to trade cryptocurrencies, and OIC of South Florida, a non-profit organization that provides workforce training and education. There is a requirement. In June, a senior executive and two economists from the Federal Reserve Bank of New York noted in a white paper that roughly 1 in every 20 American households lacks access to a bank-sponsored checking or savings account. Inadequate access to financial services forces the unbanked to rely on high-cost alternatives for transactional needs and can also make credit more difficult to obtain when households require it, the authors wrote. This can have a detrimental effect on the financial health, educational opportunities, and welfare of unbanked households, exacerbating economic inequality. Udine stated that it is premature to determine what can be done to assist county residents who lack access to basic financial services. We're looking to see if we can come up with something in the crypto space, he explained, adding that the solution could include a crypto-type debit card that could be replenished periodically. Individual investing. On the other hand, crypto is gaining traction among clients of local financial institutions. Moss & Associates, a national construction management firm headquartered in Fort Lauderdale, announced the formation of Moss Family Office Worldwide this month. Moss Family Office Worldwide is an asset acquisition management firm that also includes a cryptocurrency investment arm called NXS Crypto Fund. The fund's clients are accredited investors with a net worth of at least $1 million. There is such a high demand for accredited investors to have exposure to cryptocurrency, said Brent Campbell, founder and managing director of the fund. This is a long-term proposition. You're witnessing adoption take place in front of your eyes, and people want access to it. Campbell stated that Miami took a strategic approach that established a template for other cities to follow. Most cities must pay attention to what Miami is doing in order to remain competitive, he said. I believe it will occur rapidly, and many of these city leaders will need to keep their finger on the pulse of what is happening. Cryptocurrency trading is not limited to high-net-worth individuals. Trade Station Group, a long-standing online securities trading platform headquartered in Plantation, enables clients to independently buy, sell, and trade cryptocurrencies. The firm, which offers new customers $10 in cryptocurrency, announced its intention to go public via a merger with another firm. The company says the deal will help increase TradeStation's brand awareness among investors. Virtue Financial, a New York-based electronic trading firm, established a Palm Beach Gardens office to house 55 employees in Palm Beach County. The CEO, Doug Chifu, is also a partner in the Florida Panthers hockey team. The multi-billion-dollar trading firm announced earlier this year that it had begun market making on major cryptocurrency exchanges. That is, they have aided exchanges by purchasing or selling assets during periods of liquidity scarcity. Cryptocurrencies and philanthropy. Non-profit organizations are also entering the space, accepting cryptocurrency donations through intermediaries that screen donors and facilitate the transfer of funds. Handy, helping abused, neglected, disadvantaged youth, which has been assisting youth in the Fort Lauderdale area who have been displaced from their homes due to domestic violence, abuse, or abandonment since 1985, accepted its first cryptocurrency donation worth $4,700 this week, according to CEO Kirk Brown. "It checks every box," Brown stated. "It's a financial contribution from an individual that goes through a rigorous screening process to ensure the donation complies with tax laws and also protects the nonprofit. This protection is provided by a platform called Giving Block, which has assisted nonprofits in accepting cryptocurrency donations since 2018 while also assisting donors in identifying charities that accept them. Additionally, the platform assists nonprofits in developing campaigns to increase their visibility among would-be donors, the majority of whom are younger." Brown stated that there is a high level of interest among donors in the 18 to 45-year-old age range. "I believe it is an untapped market for donors seeking a new way to make a social impact," Brown said. "We have confidence in the checks and balances we have established," he explained. "This is the first time we have done so. It's about assuring our auditors are satisfied, our donor base is satisfied, and our recipients understand we will leave no stone unturned in our efforts to alleviate poverty." Is this FUD going to destroy the entire crypto market? What traders should expect on January 26? The coin market appears to be heading for darker skies during the FOMC meeting. While retailers fret about the possibility of a crash, novices are shaking hands with the well-heeled traders, which has become a frequent occurrence in the crypto town during periods of negative financial sentiment. In the frenzy created by the FOMC meeting's FUD, fear and greed indexes have slid further to the fear side, down to a degree of 29. As a result of digital assets crawling along a narrow bandwidth, the market charts have continued to bleed red. Meanwhile, El Salvador President Nayib Bukele uses Bitcoin to make optimistic predictions about the year 2022. Are typhoon winds going to devastate the market? The cryptocurrency universe is trembling in anticipation of the Federal Open Market Committee's meeting later this month. The meeting's presumed implications have left the space fearful, including a rate hike to combat inflation. The possibility of an interest rate hike would erode consumers' ability to borrow. Subsequently, as less leveraged money enters the market slows. While rising inflation rates are expected to benefit the crypto market, since then, cryptos have been viewed as a hedge against inflation. The supercycle has left little room for the recovery of digital assets. The FOMC's next major meeting is scheduled for March, during which members will update economic projections. Crypto assets falling below critical support levels and Wall Street liquidating stocks could pave the way for a crash. Retailers are repurchasing low-risk assets such as NFTs, stablecoins, and metaverse projects. On the other hand, veterans are striking while the iron is hot, fearful that the crypto market will bear the brunt. What are Nayib Bukele's 2022 predictions? Nayib Bukele, President of El Salvador, writes his optimistic predictions for 2022 on Bitcoin. Nayib Bukele predicts that Bitcoin will reach its long-held goal of $100,000 this year. Additionally, 2 more countries are expected to adopt Bitcoin as legal tender. Bitcoin is becoming a significant electoral issue in the United States. Bitcoin city construction, volcano bond oversubscription, and a surprise at the Bitcoin conference. Collectively, the Federal Open Market Committee's meeting outcomes could potentially favor citizens, as individuals have been bearing the brunt of inflation and pandemics. Additionally, the authorities will consider the uproar surrounding the new variant of the virus. Hopefully, the space will emerge from the FUD's blues, as it did following the release of the governing authorities' inflation figures. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.